And if you're doing, like you said, a deal with your brother-in-law, a friend of yours, which is the two of you, and you're buying a house for rental property, probably not a lot of risk there. But if you're raising significant money from outside investors, particularly folks you don't have a pre-existing relationship with, you want to be concerned about the types of investors they are and making sure you're either conducting a registered offering, which usually you don't want to, almost always you don't want to do in a real estate deal, or you're doing so pursuant to an exemption from registration with the SEC, because you don't want to get in trouble with the SEC. Yeah.
Welcome back to How to Invest in Commercial Real Estate. My name is Braden, and today we have a special guest, Tom Hutchison with GableGotwals. Thanks for coming, man.
Yeah, thanks for having me. Great being here.
So like I said, Tom is an attorney, a partner with Gable here in Tulsa. You have branches in Tulsa and Oklahoma City, but you can probably work a lot of places. But anyway, tell us a little bit about yourself, what you do for Gable, and then we'll hop into why an attorney is a necessity in investing in commercial real estate.
Sure. Thanks a lot, Braden. Born and raised here in Tulsa, graduated law school in 2007.
Nice.
And started at Gable, have been there ever since. Have a transactional practice and do a lot of work with commercial real estate developers, commercial real estate lenders, everything from helping form companies, review loan docs, review purchase and sale agreements for real estate. As you guys know, help with securities, private placements, and subscription documents for capital raises. So a little bit of everything.
Is real estate pretty much your focus? I know you do a lot of other stuff, but is a bulk of your stuff on real estate?
No, I do a little bit of anything in the transactional world. So I do some lending work for banks, real estate and non-real estate. Also do some M&A and securities transaction in the non-real estate sector. So
Cool.
Do a fair amount of real estate work, but do some other stuff as well.
Good deal.
Nice. Yep.
Man, well, you just rattled off a whole bunch of stuff that sounds easy because it's in your world. But first of all, it's impressive that you've been at Gable that long. Started there, still there, so something's going right.
Yeah, it doesn't feel that long, but I'm getting older, I guess.
It's exciting to see people stay with one company. It makes it easy for sure.
Doesn't happen as much anymore, but it's been a good time for me.
For Criterion, we lean heavily on you guys. Obviously, you rep us in everything we do, and it really makes us be able to sleep at night because, like you said, from forming a company, some people freak out like, oh my gosh, I have to start a company. That 5 minutes, maybe it's a couple things. You can get an attorney, you cannot get an attorney.
I'd like to hear, because from an attorney, what does it take to start your own real estate company? Because that is daunting to some people that are listening because they just haven't done it. So how easy is it, Tom? Just walk us through the steps.
So to actually form the entity, be it an LLC, a corporation, or a limited partnership, it's usually filing a document with the Secretary of State. It's a one-page document. Usually here in Oklahoma, you get it back the same day usually or the next day, and it costs $100. A little bit of attorney time in it. I usually don't even charge for forming the actual entity because the paperwork's so simple.
So $100, you pick a name, I guess you do a search, and you file, and the same day you can have your company.
That's right.
And what's the document you get when you form it?
For an LLC, it's an articles of an organization here in Oklahoma. Sometimes it's called a certificate of formation in other states.
Okay.
If it's a corporation, it'd be a certificate of incorporation. Now, there's also a governing document you need with those, an operating agreement in the case of an LLC or an LLC agreement. And those can be a little more complicated and a little more time consuming, depending on how many partners you have, what the entity's doing. If it's a sole proprietorship, sole member, those are pretty easy to generate as well. But an experienced counsel can put that together for you fairly easily and not too expensive.
And in your experience, you mentioned an LLC and a partnership, sole proprietorship. Is that usually what a real estate company is, how it's filed?
Typically an LLC, you see a lot of that. There are a big advantage of LLCs is the amount of flexibility you have in terms of setting up equity distributions, waterfalls, setting up management rights, whether it be a board of managers or a single managing member. Lots of flexibility there, so that's an advantage. There's also tax advantages. They can be taxed as a pass-through, so you're not getting double taxation you might with a corporation.
Okay. What if somebody was setting up and going through that form that you mentioned, and they click the wrong button, and then they find out later they get an attorney, and he says, oh, no, you needed to be an LLC. Can you change it from what you originally...
You can. Now, depending on what you've done in the interim, there could be tax consequences to that.
Okay.
If you haven't...
If it's early on, maybe it's...
Sure. If it's early on, doesn't have any assets, haven't done anything, you can change that very easily, or it's fairly inexpensive to just set up a new entity if you've got concerns on that.
That's
so
good. All right.
No, that's good. I just want people to know how easy it is. Hey, I want to form a company that's going to buy real estate. It's a form. It's $100 on Secretary of State website. You get your articles of organization. You can get the operating agreement can come later.
That's right. That's right.
Yeah. So that's how easy it is. You can get that done quick, and then you could probably get an operating agreement online sample, but we suggest using an attorney like Tom that's going to know what you need in there to protect you and have all of it laid out.
Yeah, I'd recommend that, but I have a vested interest in doing so. But I definitely recommend having an attorney do so.
And so someone would come to you and said, okay, I need an operating agreement. You just sort of ask them certain questions about how they want to arrange it, and then based on how they answer those questions, then you come up with the operating agreement.
Absolutely, absolutely.
Yeah.
And for folks like you who I've done multiple deals with, usually we can come up with an operating agreement you're comfortable with. So if on deal 2, 3, and 4, if you're setting up a new entity, it makes it that much cheaper and easier to do.
Yeah. Okay. So you could come up with one originally, and then if you form another entity for another real estate deal, then you can use the first one. Generally,
sure. I mean, every deal is different. Every deal is different, but if you got a form you're comfortable with, and the next deal is going to be similar to the one prior, it's a lot easier to put together.
All right, good.
Yeah, I think it's relationship based too. So I mean, just like you said, going through, answering the questions, saying the points of concern. I mean, I think we've done 3 or 4 operating agreements just this year, and it's literally to the point where it's an email with a few sentences that says, "Hey, here's the waterfall hurdle, here's the pref, here's the splits after that," and then we use the same form that we've approved 3 times already this year, and it's just, okay, here are the different points, and we don't even necessarily review the entire document anymore. It's nice that you can just get the change pages only. So I mean, on my time, I'm writing an operating agreement in like 5 minutes because Tom's writing it, and we've written it 3 or 4 times in the year, and we've done it before. So like you said, finding an attorney where you can lean on them throughout the same thing. If you're doing that, if you're in real estate, it becomes a lot easier.
And I just to go back to his point on how flexible the operating agreement is with an LLC is any amount of ownership percentages and the decision making and who gets the benefits and who gets the prep, all that is just really easily able to structure in the operating agreement however you want it.
Yeah, and again, a big benefit of the LLC, to your point, just a lot of flexibility. So some deals are similar than others, some are very different, but whatever you want to do, we usually can accommodate within certain reasons.
So kind of talking about an operating agreement, a lot of people can go in on investments with their friends. Like, hey, let's go in and let's buy a house. Let's fix it up. Me and you, we'll go in and we'll paint it. We'll fix it. We'll flip it. We'll do the thing. Me, you, we're painting together. That's probably okay, right? You both have a physical vested interest. You're both, maybe contributing money. You both have the expectation that you're going to get a return on that money, hopefully, but you're both working hard for it. So it's probably okay that you just get an operating agreement, fairly easier than the alternative, which is more in the securities world where you're raising money from, potential strangers passively for the purpose of, getting a return. That's going to be different than an operating agreement, right?
Yeah, that's potentially a long answer to your question, but in short, you want to be careful whenever you're selling securities. And if you're doing, like you said, a deal with your brother-in-law, a friend of yours, where it's just the 2 of you, and you're buying a house for rental property, probably not a lot of risk there. But if you're raising significant money from outside investors, particularly folks you don't have a pre-existing relationship with, you want to be concerned about the types of investors they are and making sure you're either conducting a registered offering, which usually you don't want to, almost always you don't want to do in a real estate deal, or you're doing so pursuant to an exemption from registration with the SEC, because you don't want to get in trouble with the SEC. Yeah. And most of the deals that folks are doing, comfortably fall within an exemption from registration. But again, you want to talk to a competent attorney and make sure that you're doing so.
Yeah. So, that's a massive point. That's a big one. You can't just go, create a Facebook ad and say, hey, we're going to buy an apartment complex, get, 10 people's money that you don't know, and then just go do it. Even if it works, it's illegal. So that's kind of a point, right? Yeah.
And the reality is, if that happens, probably if things go well and the investment pays off, it probably won't matter. Yeah. I'm not advising anybody to do that, but it becomes a problem if the investment doesn't go well. And then folks start asking for their money back, and they've got all kinds of rights and remedies, including rescission or suing you for fraud, alleging fraud because something wasn't disclosed. And even if you didn't commit fraud, if you busted the exemption from registration, you're going to have problems on your hand.
So let's just walk through how easy it can be, because it can sound intimidating. There's a private placement memorandum that you legally have to put together. There's maybe a subscription agreement, which, all of these things is just to bring caution, bring awareness to the potential investor, right? Just to disclose everything.
That's right. I mean, usually when a client comes to me and they're doing a capital raise for a real estate investment, the question is, who are your investors? Is it a father-in-law or brother-in-law or a close friend that you've known for a long time? How much money are we talking about? How many investors? Are they close friends, or are you going to solicit outside? And based on the answers to those questions, you find out how you structure the offering and what exemption might be applicable there. And generally, the larger the investment and the more folks you're bringing in, and folks that are maybe not people you know directly, you've got to be a little more cautious, and a little more hoops you've got to jump through. And one of those is the private placement memorandum, or sometimes called an offering memorandum. And that's a document that takes a little time and effort to put together. But it'll basically disclose everything about the real estate investment, about the company, how the waterfall works if there's a distribution waterfall, how management works, the property if there's a particular asset that's being bought, just so everybody goes into this wide-eyed.
Yeah, I think the key is disclosure. How you this is for people listening. How you keep yourself from committing fraud is disclose honesty, openness. And I'll give an example. I invested online through those online crowdfunding sites. I just saw the lawsuit today on one that I invested in that has been a disaster. But basically, the guy, it was a hotel deal, and the guy was going to ground lease the hotel deal from the owner. Well, he got a childhood buddy that lived in another state, and he formed the exact same entity name, but in Texas versus where the hotel was in Connecticut, of the hotel owner. So they looked identical. And so he agreed to pay the hotel owner $500,000 for the lease. But then he turned around and used the same company name in Texas and used our money, or the investor's money, and paid his buddy, which is him, $1.5 million for that same lease. Gosh. Pocketed the $1 million. And he might have been able to do it if he would have told everyone, this is exactly what I'm doing, but he didn't tell anybody. Nobody knew, and he made it look like it was the same company, and the $1 million just went to his pocket, and now we're all fighting for our money back. Wow. So it's all about disclosure when we're doing these things, and the whole point of the PPM, the private placement, and all this is to fully disclose everything we know possibly that about the offer and what can go wrong with the offer, so everybody goes in with full knowledge.
Yeah, I think that's a great summary, and I would not advise doing just what you described right there.
Yeah.
Yeah, so I mean, I think our last PPM the private offering memorandum was 103 pages. You know, it's a heck of a document. It includes the operating agreement. It includes articles of incorporation or articles of organization. It includes maybe a budget or bios about you.
Where the funds are being used, who's getting what monies that we're taking from investors.
Yeah, and like Tom mentioned earlier, it really matters if the deal goes south. But if the deal goes south, you're probably going to get sued. Somebody's going to read this document. And I'm telling you, if you commingled the funds, if you didn't pay your taxes, if you paid yourself too many fees or didn't follow what you wrote, right? Because they get the opportunity to make changes. Yep. They get the opportunity. We get the opportunity to make changes. And if you don't follow the rules of your own operating agreement, you're going to get in trouble. And like you said, I mean, you can be dealing with large real estate transactions or large amounts of money, and at the end of the day, you know, people think attorneys can be expensive, and you know, from some perception, attorneys are expensive, but compared to, you know, 20 years in prison or the fines from the SEC you could get, or not being able to raise money or buy real estate deals again, or thinking things are okay when they're actually super illegal because of your ignorance and your ability to not want to go get an attorney, could bite you in the ass.
Yeah. I'll reiterate all that again. And the other thing I'll add is like the operating agreement, if you're doing multiple deals, the PPM can be a lot more efficient and less expensive to prepare if it's a similar structure every time. I know that's something we've done. Obviously, if the deal's wildly different, you've got to revise it a lot. But a little bit of effort on the first one can make things more efficient and less expensive down the road. Yeah,
I got a little story about how expensive attorneys are. So. You know, I'm one to try to save a buck every now and then. And we started with no money, and so I used to not use attorneys to the extent I use them today. And we had this property. It was in Arkansas, and we had put a bunch of non-refundable, or we put a bunch of refundable earnest money down. But we were about to pass our where the money goes non-refundable.
Going back to the deadlines that Tom mentioned, are probably the most important part.
And so we knew we were going non-refundable, but what happened was the day that I went non-refundable on $250,000, the main tenant, a story came out about them potentially filing bankruptcy. Not even filing bankruptcy, just potentially filing bankruptcy. Well, the lender pulled the loan, and now I was unable to close on the property by the date I had to close. And so I ended up losing $250,000.
And you were probably still willing to buy it.
I might have tried to buy it. Yeah.
But you couldn't because the lender
Couldn't, because I lost the loan because of the story. But the takeaway is this, that it could have so easily been saved, the $250,000, if I would have had a competent attorney make sure I had a material adverse change clause in the contract, which I did not have. And so what that means is, hey, as long as this deal is the same deal that I signed up to buy when I entered the contract to the time I close, then I'm good. But between those two dates, the landlord or the owner's got to take some risk in case one of these tenants files for bankruptcy and the deal changes and it's now not the same deal. Well, I didn't have that in there, and my partner and I, we basically burned $250,000 in a day, and it was a really tough lesson. But I don't know if I've spent, I may have spent $250,000 on attorneys from like day one to year 19, and yet I lost all of that in a day.
Yeah.
Right? Trying to save a few dollars. So anyway, that's my story.
So that's another part
my
of
gosh.
the documents is the contract between the buyer and the seller, I guess, right?
Yeah, the purchase and sale agreement. That's an important one.
Yeah, that's got to be an important one.
Yeah, and just a little bit of time from an attorney reviewing those can lead to avoiding some of the issues you just mentioned right there.
Definitely.
We were chatting a little bit before we got started, and I think deadlines are something, just being mindful of those, creating a schedule of those. That's one of the things that trips people up, particularly if they're not using an attorney, making sure they're meeting their due diligence deadlines or title review periods, all those things, because missing one can cause you to lose your escrow money or other adverse consequences.
Do you ever find yourself actually corresponding with the attorney on the other side of the deal?
Absolutely,
Does that
absolutely,
happen quite a
yeah.
bit?
Particularly on bigger deals, a lot of times the attorneys end up doing most of the negotiation back and forth.
Okay.
But a lot of real estate investors are pretty savvy, and so sometimes it's more of a take a look at this and spot issues.
Yeah.
The level of review depends on the size of the deal, the client, all those things can be customized as needed.
Okay.
So.
Good.
Well, I know we're almost time to wrap it up, but I do want to make a point on how to pick an attorney, because I have seen in my time attorneys that can be very combative, and they can spend a lot of time fighting, increasing their fees all along the way. And so I think it's really important to find an attorney that you trust, that you have some relationship with, or they know someone so they're in the deal for your best interest. Because I have at times gone with an attorney I didn't know, and I really felt like they were going to drag it out, and I wasn't their primary interest. Their fee structure was. So like, we trust Tom, we've used Tom, but there are other good attorneys. But I would say that's a big recommendation for me, is get one that you trust and that you have a relationship with, that's going to be working to lower your attorney bill, not increase it.
Yeah, definitely a big plug for Tom. We use him on, like I said, every single deal, every transaction, every operating agreement, every purchase and sale agreement their team takes care of. They put schedules, just like you were saying about the timelines. I get a gorgeous Excel document I open up, and it's got timelines on it, put those in the calendar. I mean, it just literally allows us to do what we do best, and allows you guys to do, what you do best.
I'm amazed at the things that you and your staff find that I had no idea that was, a concern. And the other thing I like about your staff is you give us what the concern is, and you tell us why that's a concern. And then a lot of times you say, well, the final decision is up to you, but here is exactly what that means, and here's possible consequences. You guys decide whether you want to do that or not.
That's a big one.
It's really easy to work with.
Thanks for the kind words, guys. Appreciate it. Just to kind of reiterate what Joel said and all you guys are saying. I mean, you want an attorney who's going to keep their eyes on the prize, which is getting the deal done.
Yeah.
And is commercial and,
Right.
and identifies the risks, and ultimately it's your degree of risk tolerance and whether you want to go forward or not.
Yep.
But you don't want somebody who's just negotiating for the sake of negotiating. There's a reason we do this, and it's so the deal gets done, not so you can drive up fees.
Yeah, you guys are really good with that. I'm glad you brought that up, because that's how you seem to attack it, is you want to get the deal done. Yeah.
Well, hopefully you learned something today. If you didn't, get an attorney. That's what you should learn. Thanks for joining us. Make sure to like and subscribe. If you're interested in using Tom or Gable,
Hit us up.
hit us up. Give it a Google. We'll catch you next time on How to Invest in Commercial Real Estate.
Thanks for having me, guys.
Tom.